So the government created this money. The Federal Reserve Bank created this money out of thin air, gave it to you. You use these dollars, which you didn't have to work to earn. You use these dollars to buy something that's made overseas. And these companies overseas are saying, we'll accept these dollars, which were printed out of nothing.
Is inflation here to stay, or is it just temporary like the Fed thinks?
That's a good question. That's the million or billion, I guess nowadays, $1 trillion question that everybody's trying to figure out. The Federal Reserve Bank and the government had said time and time again that inflation is transitory, meaning inflation is temporary. And it's interesting because the Federal Reserve Bank and the government came out in the early part of 2021 and said that this inflation will be here. It is going to be strong, but it'll be gone by mid-2021 or by end of 2021. Mid-2021 came, inflation came even stronger than expected, didn't have any signs of slowing down. And the Fed came out again and said, yes, we will continue to see temporary inflation, but it's not going to end in 2021. And that's when President Biden came out and said that inflation is temporary, but it will go away eventually. And the Federal Reserve Bank needs to do everything they keep doing to help support and grow our economy. Well, now towards the end of 2021, the Federal Reserve Bank came out again and said, yes, we still believe inflation is transitory. We think it's going to last longer than expected. We think it's going to be more intense than we expected, but we still think it is transitory. Now, you got to take everything that they say with a grain of salt because they're incentivized to keep people not worried. They want you to be calm because if you're worried, that would create panic, that would create chaos. And I'm not saying you need to be panicking, but you need to understand what's going on. The reason why they say that inflation is transitory or temporary is because they're looking at one side of the coin. You have the supply chain issues going on, which is the side that they're looking on, and then you have all the money printing, the more I call inflationary measures. So they're focusing on the supply chain issues. And what's going on with that is you have a worldwide supply chain slowdown because of this pandemic. When the pandemic hit in 2020, companies, manufacturing plants around the world shut down. The United States buys a lot of stuff from China and Vietnam and countries overseas. Well, when the pandemic hit, these manufacturing plants shut down. And now they're starting to open back up. Some of them are still not 100% capacity, but some of them are opening back up. It took them some time to get back to running, and they are having a tough time producing products. So that's the supply side. On the demand side, you have a lot of people in the United States with money in their bank account. Maybe they made it from stimulus checks, unemployment checks, they made it from their job, they made it from cryptocurrency, they made it from stocks, whatever it is. People have money in their accounts and they want to buy things. So you have this demand and pent-up demand because people are like, oh man, I didn't spend any money in 2020. I need to spend some money now.
Right.
So you got this pent-up demand. People want to spend money. They want to go and buy things, but there's a shortage. And because of this shortage, they're having a tougher time buying things. If you go out and try to buy a car right now, it is much more difficult. You're going to have lower inventory. And people are still saying, okay, I don't mind paying a 30% premium or whatever the premium is. I will pay a premium price. I just want my product now. And even with that, people are having a tough time getting their hands on products, whether it's a house, a car, you go to the store. Some stores across the country are empty. They cannot fill up their shelves because they cannot source products. So you have all this demand, people who want to go out and spend money, but then you have the supply issue. And we talked about what's going on in Asia. We have the manufacturing plants that are starting to kind of make orders again. They're trying to catch up, but they have all these orders from companies in the United States that are trying to just make up for all this lost money, like trying to make up for all these lost products because companies were not selling that much in 2020 because they weren't producing. And so now they're trying to make up because everybody wants to buy products.
Right.
And so they're sending in all these orders to Asia. They're trying to produce the products at whatever capacity they're open at. Some of them are open. And then they had the issue of trying to get the products out. But the ports in Asia were backed up. They couldn't get their products onto a truck, or they couldn't get their products onto a boat. And then once they got the product onto a boat, finally, you think, okay, we've figured out the supply chain bottleneck. We're out of Asia. Now we're in the water and we're coming to the United States. But then these ships start coming to the United States. They come to the borders in California, and now the California borders are backed up with cargo ships. It is the worst supply chain backup that we have ever seen. And so that's when the Biden administration came out and they said that we are going to open these ports in California for 24 hours a day because they weren't open 24 hours a day before. That way we can kind of help with the supply chain mess. So now these ships come to California. They're already backed up for the longest time ever. It takes forever for them to finally get to the port. And you're like, finally, my products, my raw materials, my goods are finally in the States. So we're all set, right? Except we're not, because we have a labor shortage in this country. And when a product comes into California, it has to be now driven to its warehouse, to its company. It has to be driven to wherever it needs to go. We have a truck driver shortage.
Right.
So now there's products in California and now it might just be sitting there because now you have to find a truck driver. And if you can't find a truck driver, they're going to charge more money now because we have a labor shortage. So you're having to pay more money, you're having to wait longer to get your product finally to your manufacturing plant. And now it's here in the United States. You have your raw materials or maybe you have your final product. You need to get this product either completed or if it's already completed, you need to get it onto the shelf of a retailer. Well, everything along that line to get it from a truck to completion to a retailer is costing more money now because, again, we have a labor shortage still going on. We have companies around the country that are looking for labor that are not able to find work. So it is taking longer. It is costing more money. And then when it hits the shelf, people are just scooping it up because people want to buy products. They have money to buy it. So this is the supply chain issue. It is a real issue. And this is what the Federal Reserve Bank and the government keep focusing on, that as soon as this bottleneck or multiple bottlenecks clear up, that we will get rid of the supply chain issue and the economy will finally be able to function. And once that happens, we're going to see the prices of all things come down because then it'll be like a sigh of fresh air because now everything is released.
Right.
And I don't disagree with that. We have major supply chain issues. Once we start to open things up, once things are flowing normally, I actually think we're going to see a surplus. There's a good chance we will see a glut because a lot of times when you see these types of excess demands, they're not sustainable because they're excessive amounts of demands. As people start to get their products, that demand will go down. And there's a good chance that we will see an excess amount of supply because companies are going to order a bunch of products, they're going to order a bunch of raw materials, and they're going to start producing the products because everybody wants to buy their products, and everyone's going to buy their products, and then they're going to have a whole bunch of products, and people won't be able to buy them fast enough. And so you might see products come down quite a bit, the price of products, because you will see excess supply in some goods. Not everything, but some things you will see the excess supply, which will cause things to go down. So yes, in that sense, whenever that happens, probably in 2022, once the supply chain issues go away, we will see the price of these things go down. But that doesn't take away from the fact that we have devalued our dollars. This is the real inflation. Inflation is when you're printing money, debasing the value of your dollar, which then makes the value of each dollar go down, causing the price of things to go up. And so this is something that we haven't really felt the full effect of. I mean, you have some people that are saying, oh my God, the prices of everything have gone up because our dollars are devalued. The prices of homes have skyrocketed because our dollars are devalued. The prices of cars have gone up because our dollars are devalued. It plays a part, but that's not the only reason. You know, that's another, it's not the full answer. It's not the full story. Yes, it plays a part, but it's not the full story. You have the supply chain issues. Houses, construction workers cannot find labor. They cannot source products. So it's tougher for them. And because of the housing market, you have the perfect storm. You have low interest rates. You have all this demand and a low inventory of homes. Now it's starting to kind of fix up, but that's what caused home prices to go up. It's not just the devaluation of the dollar, but it is a real issue. The devaluation of our currency is a real issue, and you cannot ignore that. This is what the Federal Reserve Bank and the government are ignoring. They're saying everything that has to do with these higher prices are just the supply chain issues. This money printing that we're doing, the stimulus that we're doing, this new infrastructure that we're going to fund is not going to cause any sort of inflation. How could it? How can printing money cause inflation? Well, if we look at what inflation is when the value of a dollar goes down, causing the price of things to go up. Why are we facing these supply chain issues? People have dollars in their pockets, which they're using to buy products which are made overseas.
Right.
Now, this is interesting because where are these dollars coming from? Some of these dollars are coming from no production. People are sitting at home playing a Call of Duty, or they were sitting at home playing Call of Duty or Fortnite or whatever game they were playing, and they were getting free money from the government. So the government created this money. The Federal Reserve Bank created this money out of thin air, gave it to you. You use these dollars, but you didn't have to work to earn. You don't have to produce anything to earn these dollars. The Fed just created this money out of thin air. They created these dollars. You have these dollars. You use these dollars to buy something that's made overseas. And these companies overseas are saying, sure, we'll accept these dollars, which were printed out of nothing, printed out of thin air. So you have countries overseas that are accepting these dollars that were just printed, and in exchange for that, they are sending us products. So good deal for people in America, because these dollars are created out of nothing, and companies and countries around the world are saying, hey, you can print this out of nothing. We'll still take it. We'll still accept it. And so they're accepting these dollars that are produced, and then they're sending us goods. Right. That's one of the reasons why we're seeing these supply chain issues. But you have to imagine that as we continue to keep printing this money, people are going to realize that, hey, there's a lot of dollars in circulation. $10,000 today isn't worth what $10,000 was 20 years ago or 30 years ago. And this is what causes the price of things to go up. And so when we talk about inflation being transitory, sure, these supply chain issues are transitory, but the actual inflation from the devaluation of our dollars, that is not transitory. We have printed the most amount of money ever in 12 months and 18 months between 2020 and 2021 than we have ever done. Mm-hmm. And we haven't produced anything. Money is supposed to be a representation or a store of value. So you go and do something, you go to work, you produce some value for your job, you do something, and you get rewarded with some sort of value, money, right? In this case, our dollars are supposed to do that, but what are they represented by? What is that store of value that they're actually doing? Mm-hmm. I mean, we talk about this all the time. Gold takes time, effort, and labor to mine. Our dollars can just be printed. And so you go into work every single day to earn these dollars. And as long as countries around the world continue to accept these dollars as a store of value, no problem. But as countries start to realize, and as people start to realize that, hey, maybe the amount of value that $1 has isn't as much as it was, we need more dollars, or we don't believe in this dollar, that's when people start to run into issues. That's when you start to see inflation. Mm-hmm. And now we talk about the inflationary effects, what causes it in terms of government spending. The government is not a for-profit entity. They get their money from you and I through taxpayers, through tax dollars. Mm-hmm. I go to work, you go to work, we go to work, we get paid. The government takes some of that revenue in taxes. Well, what happens now when the government wants to spend money and they don't have enough tax dollars? Well, the first thing they're going to do is they're going to try to raise taxes. You want to go out and buy a new Gucci scarf, you're going to have to make $300 to go out and do that, right? So that's what the government's trying to do. They're trying to raise money by raising taxes. And, we're seeing the Biden administration trying to raise taxes. They say it's just on the wealthy, but, they're trying to raise taxes in some instances to raise money for the new infrastructure plan and to raise money to pay off all this high national debt. Now, they're having some difficulty with that, but let's just assume that this proposal does not get passed. They cannot raise taxes. And now what? Are they going to cut their spending? Probably not. Because when they tax, you know where that money is coming from. If they raise your taxes, you know they're getting the money from you. It's very obvious. I paid my taxes, and so they got their taxes from me. But if they don't raise taxes, or even if they do raise taxes, but they don't raise enough, because no matter how much they raise taxes, they will never be able to raise enough money. Mm-hmm. Now where is that money coming from? Because they're still going to continue spending. I mean, it's telling the government to stop their spending it's not possible. I mean, not at least in the world that we're seeing right now. Mm-hmm. So who pays that price then? Because there's still a cost to all that spending. And so what are they going to do? They're going to print that money. The Federal Reserve Bank will print the money, give it to the United States government, and they're going to spend it. Now who pays the cost? Well, if you don't know who pays the cost, then it's probably you. And that's what happens. It's the average person who ends up paying the cost through inflation. Inflation is known as a hidden tax because the person who pays the tax is the person who doesn't understand it. It's the financially uneducated. And that's what's crazy, is either the government is going to raise taxes, which means you pay more money in taxes, to pay for their spending, or if they don't get their tax bill approved, they're still going to spend, which means then they will print the money, cause more inflation, and then you still pay the price through inflation. The average person pays the price twice. And that's, is this inflation transitory? No. The way that you can make it go away is, it's not easy. It's not, it's going to be painful. You got to slow down the spending. You got to pay down some of the national debt, and you need to raise interest rates to slow down the economy. Nobody wants to do that. Why? You have a re-election coming. You have new midterm elections coming. Nobody wants to be in office when the economy is slowing down, but sometimes you need an economic slowdown to allow for a refresh. That way you can get the bad money out of the system and allow for new money and real assets, productive assets to come in.
Mm-hmm. I mean, there's just no reason for them to do that, though, at least not right now. I mean, it's worked for them so far, right?
And that is the argument that they always make.
Mm-hmm.
Well, it worked in 2008. We printed money. It worked in 2001. We printed money. And I was listening to a podcast, I think it was Peter Schiff. He made a very good analogy. He was talking about that very same thing. He said that you could think of it kind of like somebody doing drugs. I did heroin. Nothing happened to me. No big deal. I did it again. Nothing happened to me. No big deal. Let me just up the dose. Why would anything bad happen? Nothing bad has happened yet. And that's what we're doing. We just keep upping the dose.
Right.
Nothing bad has happened yet. But what happens when you do a little bit too much? Money has to have some sort of value behind it. It has to take some sort of production, some sort of value to produce it. And if it doesn't, then people will start to ask the question of, what is the real value of that money? And if people start to make that question, and they start to question the value of our dollars, they start to value the questionability of our economy, then you start to see massive amounts of inflation.
I mean, it's hard for the Federal Reserve and the federal government in general, but their hands are kind of tied in a lot of situations. Like last year with the stimulus checks going out and a lot of the extra money that they just printed, they kind of had to do that.
Why?
I mean, America was failing. It was failing. We were failing. Nobody was open. Nobody was making money. They had to keep America afloat.
Whose fault is it?
I mean, it's nobody's fault. It's the pandemic.
Yeah, it's okay. It is somebody's. Everything has a fault. First, I mean, you can look at people and businesses. Businesses had spent all their money on bailouts, meaning, oh, we want our stock prices to go up. So instead of using our profits to actually invest in growth, to invest in production, to invest in something real, how about we just take this money and buy up our stocks? Or we go into debt and buy up our own stock to artificially raise the price of our company. Now these companies have no reserves. The economy shuts down for 2 weeks and companies have no money to pay people. Then you have people with, again, no savings. No savings at all. You don't get one paycheck, you don't have money to eat. Now this is where the government gets put into a tough situation. What do? Do we let people fail? Do we let people starve? Do we let businesses go down? And so, like what most strong governments would do, that's when they started helping people and they started helping corporations. Now the question is, to what extent? How much do you do and how do you avoid abuse? Because I know a handful of people, and I'm sure you do too, and I'm sure every person watching this knows somebody who abused it. And an example of that would be, okay, I can go back to work 40, 50 hours a week and make less money, or I could just sit at home, play Call of Duty, and get my unemployment check. Not everybody did that, but you had a handful of people that did that. And it's not just people. You saw the same thing with corporations. Corporations got an insane amount of money. Lots of money with very little strings attached. Mm-hmm. Just don't buy back your stock for a little bit of time. And don't fire people for 6 months. Mm-hmm. You saw that happen with companies like United Airlines. They said, okay, here, we'll give you these billions and billions of dollars. Just don't fire anybody for, I think it was 6 months or 9 months. As soon as that time hit, that's when they started firing people. They started letting people go. And what's interesting is even before that day, their day where they weren't allowed to fire people, they started giving them notices. Hey, just so you know, we're going to fire you. So if you want to leave, you can leave now. Kind of as a forewarning. They didn't do anything illegal. They didn't fire them. They were just letting them know that, hey, as soon as we're allowed to, we're going to fire you.
And you can't blame people for not wanting to work in that kind of environment. So people instead just stayed home. If the government's going to provide it, why not take it?
Yeah. No, I mean, okay. yeah, from a financial perspective, if the government's giving it to you, why not take it? Now, from morally, you got to decide what's right for you. The government offered us, minority mindset, tens of thousands of dollars of free money because we're a business. When the pandemic hit, businesses could get a PPP loan. And a PPP loan is a forgivable loan, meaning you can borrow money and not have to pay any of it back. So it's free money. And we qualified for tens of thousands of dollars of PPP. All you had to do was continue running your business and not fire people. But I didn't take it because it's against my morals. Why would I take this money that we did not work to earn from the government, especially when we don't need it? My accountant called me and said, Justbury, they're throwing away tens of thousands of dollars. It's free money. Everybody said it's free money. But I don't want to take that money. I know where the money comes from. People say, oh, it comes from the government. The government's paying for it. Where do you think the government gets their money? The government gets their money from you and me, taxpayers. And if they don't get it from taxpayers, they get it through printing the money. And then who pays for it? The average person. Inflation. It's against my morals. Religiously, it's also against my morals because in our religion, the Sikh religion, the religion that I follow, one of the 3 fundamental tenets is kirat karo, which means earn an honest living. It is against my religion to accept a handout for something that I did not earn. Why would I take that free money for something that I didn't need? Hey, we had costs. We shut down our office. We shut down a lot of things. And guess what? Nobody came in the office for months. I lost, I don't remember, at least $10,000, but probably multiples of $10,000 of just no use. Nobody came in. But I didn't take that money. And so from financially, yeah, I should have taken it. I should have taken it. It's free money. But morally, I don't want to take it because I know where the money comes from. And that's the question is, I'm not going to sit here and tell you what's right for you. You got to make the decision. If you want to take the free money and sit at home and play Fortnite because you think that's better, fine. That's up to you. It's a free country. The government is giving you the money. You can do that. But if morally you're not okay with that and you want to go work, unfortunately, you got screwed over by a lot of places. And that's really unfortunate, not just for our economy, but for our country.
I mean, a lot of people stayed at jobs, and then what do they have to show for it? They get fired. They get told in a month that they're going to quit. They have no added benefits, while a lot of places were coming and hiring people, giving them all these benefits, giving them all these sign-on bonuses. Meanwhile, the people that have been there, they're not getting anything.
It's unfortunate.
It's very unfortunate. And now, you kind of mentioned it before, we have millions of people voluntarily quitting their job right now because they can't stand it anymore.
I think that's great. I think that's great. I am 100% for that because people are starting to realize that, hey, I shouldn't just work for a paycheck. I should work for something that helps me do something that I love, that makes me happy, and pay the bills. Before, when people applied for a job, the only thing that they looked at was, what is the pay?
Right.
I don't care what I have to do. I don't care if I hate my job. I don't care because you're going to be at the office 9 to 5 anyways. Might as well get a bigger paycheck. But now people are realizing I can be more productive from home. Why not do something that makes me happy? Why not do something that aligns with my morals? And so people are voluntarily quitting in the United States at the fastest rate we have ever seen. I love it. And who's going to pay the price for that? The old businesses that have been screwing people over. And now they're saying, oh, we can't find a job. Well, we can't find people. We can't get people to work for us. Well, then you better start treating your people better. That is what a free market is. That is what the United States is supposed to be, a free market. Meaning if you have 2 companies, company A, company B. Company A treats their people like crap and company B treats their people good, people are going to want to work for company B.
Right.
And the company A is going to not be able to get employees, so they're going to try to offer more money, and then they're going to be forced to offer more benefits than company A. Either they're going to fail or they're going to have to figure their crap out and start treating people better. This is what a free market is. Now, unfortunately, we have other things that come in the way from our free market where they don't allow that to happen because then company A might get a bailout and the government comes and just gives them billions of dollars. They keep treating people like crap. Don't worry about it. Unfortunately, we do see that happen. But in a true free market, what we're seeing is people are starting to leave and say, I don't want to work for this company. People still need money. People still need jobs. But what people are realizing is, hey, I want to go to a company that aligns with my morals, that aligns with my beliefs, that aligns with my values, and then also pays me. And yeah, we are going through a transition in our economy. It is going to be a painful transition, but this is what now goes back to the issue of inflation. Our economy has to go through booms and busts. Every economy does. Every asset class goes through a boom and bust. It is a way for when people get greedy that people will then refresh. The market refreshes, asset classes refresh. We've seen this happen for centuries. Go back to the Netherlands in the 1700s. We have this right here, tulipomania, the first major financial or recorded financial bubble in history. Tulipomania, 1637, on tulips. It's been happening for centuries. It's not anything new, but what are we seeing happen? The Federal Reserve Bank is trying to desensitize us from risk. They're trying to make it so you can't lose money. When we saw the pandemic hit, we saw the biggest recession since the Great Depression. The stock market crash only lasted 2 months. Why? The Federal Reserve Bank opened the money printer, not just for what you were saying to people and corporations, but also for the stock market. They poured money into buying these assets. They poured money into these institutions. That way the market would start going back up so people would feel confident in the stock market, so people keep investing their money. And what happens? The stock market went back up. And now it's reliant on this free money. They're still printing money every month. They're still putting $120 billion into the month at the time I was recording this video. Why? Because they cannot stop the money printer. They're worried about something called a taper tantrum, which means if they stop the money printer, investors are going to get nervous and they'll see the market go down a little bit. They'll cause a minor crash. So they're not willing to slow it down. And what's the cost of that? Again, inflation. Who pays the price for that? The average person. And this is what so many people do not understand. And it's crazy where you start to ask, who is our system and our society really valuing?
So it sounds like the Federal Reserve can't win here. If they print money, now they're causing inflation. If they don't, people fail. So what are they supposed to do?
That's the economy that we live in. You have to make that decision for yourself. What type of market do you want to live in? What type of economy do you want to live in? Do you want to live in an economy that's reliant on the government? Or do you want to live in a free market where things will correct?
Which are we right now?
We're somewhere in the middle. We're supposed to be a free market, but we're getting pushed more and more to the other side. I mean, you got to just decide what it is that you want. And unfortunately, the Federal Reserve Bank has a lot of power and a lot of influence. And as they continue to do this money printing, the average person is paying the price. And that is what inflation is. And that is the inflation that is going to stay. These supply chain issues will fix themselves. They will go away. But the inflation cannot just go away. Our dollar is being diluted. This is why people are moving their money to things like cryptocurrency, to gold, because they're worried about the devaluation of our dollar.
What does cryptocurrency do?
Cryptocurrency, let's focus on Bitcoin, because cryptocurrency is a whole asset class. Mm-hmm. Bitcoin is supposed to be now another store of value. Bitcoin is... There's 21 million Bitcoins that can be mined. In order to mine a Bitcoin, it does take effort. It takes computing power. A computer has to now solve a problem to mine a little bit of Bitcoin. So it takes effort to mine that Bitcoin, and then there's a limited supply of Bitcoin. So it's a deflationary asset because now there's a limited supply. If you and I go and buy Bitcoin, now there's even a smaller supply. And if more and more people buy Bitcoin, then that would make its valuability, make it more valuable because more and more people are buying it. And if it has use, if you and I can exchange Bitcoin, if you want to buy my mug and you pay me in Bitcoin, now it has use. Now it's real money. It has its store of value and it's used as a means of exchange. You can compare that to something like gold. I own cryptocurrency and I also own gold. Mm-hmm. Gold is another store of value. It takes time, effort, and labor to mine an ounce of gold. That's why it's real money, right? But the issue with gold is if you wanted to take your gold and go buy something in Japan or India or anywhere else in the world with it, it's not that easy. You got to take this gold with you, put it in your pocket, put it in your suitcase, and then transport it to the other end of the world. That's not very easy to do. Or even if you wanted to buy something here with it. If you wanted to go buy a pair of shoes with your gold, you got to take your bar of gold and cut it into pieces. It's a lot of work and it's not that easy to do. And so that's the difference between gold and Bitcoin versus Bitcoin. This is something new, and a lot of people don't understand it, and so people are naturally scared by it, and they don't believe it because why in the world would people start trading this random thing on the internet, this random coin on the internet when I can use dollars, which is backed by the government? And so, you're going to face the hurdle of people questioning it and people not understanding it, but eventually more and more people will start to learn about it. More and more people will start to be okay with it, and then they'll start to use it or buy it. And that's what the whole movement of cryptocurrency is. It's a movement of people moving to their own currency, not controlled by a central authority. Because your gold, it's not tracked like our dollars are, right? Your gold, you can keep it in your own basement and nobody knows where it is. Versus our dollars are different because it's controlled by a central authority. Our dollars are controlled by the Federal Reserve Bank and the government, which means that your dollars can be easily manipulated. The value of our dollars can be manipulated because if the Fed prints more dollars and people lose value, they lose faith in our dollars, then the value of your dollars go down. Mm-hmm. So you might work hard to earn $10,000. You produce $10,000 worth of value. You take that $10,000, you put it in your bank. The money doesn't do anything because your bank isn't paying you anything. In 10 years, that $10,000 is still going to be $10,000. But that $10,000 will not be able to buy you what $10,000 can today. It's not because the value that you produced isn't valuable anymore. You still produce that value, but it's the way you stored that value. Those dollars, that currency that you stored it in, did not maintain its value. So that's why people moved to gold historically. But now people are moving to things like cryptocurrency. You also saw people would move it to land, but again, land has the same issue where you cannot transport land, and it's not easy to conduct exchanges. It's not easy for me to buy things with land, right? You can't do that. Mm-hmm. But with Bitcoin and cryptocurrency, you can. And that's what cryptocurrency is. It's the people movement for money. And it is not centralized, meaning it's not controlled by the Federal Reserve Bank. It's not controlled by the United States government. It's controlled by the people. You have tons of nodes around the world. Nodes are computers which monitor and control Bitcoin. So it's not controlled by one agency.
So we have inflation, it's at record highs, and the Federal Reserve, they're not going to fix it. You said supply chain issues will eventually fix themselves, but yet people right now are still struggling to buy things because the price is going up. So what are some things that people can actually do right now and in the future to kind of get around this inflation problem?
You have to understand what it is, and then you have to move your dollars into something that will preserve its value, or buy assets. Now, this is a tricky thing for me to say because, people would say, oh, go out and buy stocks, go buy real estate. It's tough because we're also at record highs in everything across the board. Mm-hmm. So, people don't want to, it's like a double-edged sword. Either you go buy assets at this record high and potentially they go down and now you lose money, or you sit there and wait in cash and watch your dollars get eaten away by inflation. There's no right answer. You have to understand what's going on and then make some decisions. Like I have some cash. I don't have as much cash as I used to because I moved a lot of my dollars into stable coins, cryptocurrency, which earn interest. So I've moved a lot of cash into that. I have my passive investments. I have money going into things like stocks and cryptocurrency consistently, dollar cost average. Every week I have money going into my stock market ETFs. Every day I have money going into cryptocurrencies, dollar cost averaging them. And every month I have money going into buy gold, physical gold. Then I have cash sitting there waiting to invest into things like real estate, into stocks. If I see some they go undervalued, you can look at emerging market companies. I invest in startups. So, you just have to understand where the opportunities are. Don't chase. Don't chase. Understand and then look for value, look for opportunity. And when you see that, then you have to go and capitalize on it. Inflation is not why you need to go and just run and dump all of your money into gold or cryptocurrency. You don't want to be chasing, but you need to be smart and you need to understand what's going on. And if you want to be an investor, understand that investing is not for 6 months. Because the next 6 months, the next 12 months, we're going to see volatility. We're going to see volatility as the supply chain issues slow down. We're going to see volatility issues as we see the economy start to kind of rely on itself without the help of the Federal Reserve Bank. We're going to see volatility as one day the Federal Reserve Bank starts to raise interest rates. As money becomes more expensive, that will slow down inflation, and that will cause more volatility. But you have to understand what it is that you're investing for. And that's the tricky thing. There's no right answer, but you have to be educated.
Is there any way to avoid inflation altogether?
We're going to jump back into the video in just a second. But before we do, I want to talk to you about our Market Insiders program, because if you're interested in investing your money in the stock market and the real estate market, our Market Insiders program can really help you with that. Market Insiders is not a class. It is a weekly group coaching session. Every week, you're going to get access to a live class where you'll learn something about how to invest your money in the stock market and the real estate market. And because these classes are live, you will be able to apply what you learned to the real world. So for example, let's assume that this week's coaching session is on the topic of how to read a cash flow statement. That means for the first half of the class, you might go over what is a cash flow statement, how to find a cash flow statement, what it means, and how to understand it. And for the second half of class, if Amazon released their earnings statement this week, you might actually go over Amazon's cash flow statement. That way you can apply what you learned, since all of these coaching sessions are live. The real estate coaching sessions work the exact same way. You're going to go over a lesson like how to understand the cash flows of a property or how to find an undervalued property, and then you're going to apply what you learned to today's market. As soon as you enroll in Market Insiders, not only are you going to get access to our stock market and our real estate coaching sessions, but you're also going to get access to our stock market beginners class for free that will walk you through everything you need to know to get started investing your money in the stock market. And you're also going to get access to all the previous coaching recordings, that way you can go back and learn more, and you're going to get access to our private community of serious investors. This is our exclusive Discord community that's made just for Market Insiders, and you can go into this community, network with other investors, and you can ask your questions. When I was working to create Market Insiders, there were two things that were very important to me. First, the coaches, because I wanted to make sure that the teachers were real investors, and second, the pricing, because I wanted to make sure that it was very affordable. First, talking about the teachers, all of our coaches have been vetted. These are not some random gurus that we found. These are real investors, people who have been investing their money for years, people who've gotten great returns, and people who have the money behind them. We're talking about hundreds of thousands, if not millions of dollars invested themselves. So these are real investors who are doing what they teach. And on the price side, it was very important to me that Market Insiders was an affordable program. I didn't want to create a program that would cost you $1,000 or $900 to get started with Market Insiders. I mean, it costs less than the price of dinner for two if you want to get started with Market Insiders. And you don't even got to take my word for it, because I know there's a lot of crappy products on the internet. You can try out Market Insiders for free. We have a free 10-day trial where you can go through the entire Market Insiders program, and then you can decide if it's right for you or not. During this free trial, you're going to get access to everything. You're going to get access to our group coaching sessions, you're going to get access to our free stock market class, you're going to get access to our previous recordings, and you're going to get access to our private community of investors. This way you can try it out and then decide if it's worth the money or not. If you start Market Insiders, you try it, and then you realize that you hate it, well, then you can cancel your membership during your free trial and it won't even cost you a penny. But if you start Market Insiders, you try it, and then you love it, well, then you can decide if it's worth it or not for you. This way you literally have nothing to lose. So if you want to learn more and get started with your free 10-day trial to Market Insiders, I'll put the link to where you can get started and join with the free trial in the description below. Get rid of the Federal Reserve Bank. The Federal Reserve Bank can print money. When you debase your currency, you are going to create more inflation.
What do you mean by get rid of the Federal Reserve Bank?
Get rid of the Federal Reserve Bank. They're not a federal entity. They're called the Federal Reserve Bank, but they're not actually federal. It even says so on their website. Is that going to happen? Probably not. I mean, in this day and age, it's going to be nearly impossible to do that. But, I mean, how do you get rid of inflation? You don't debase your currency. You have your currency based off of something tangible, and you have a limited supply of it. If you cannot increase the supply, and you have a limited supply, and you have demand for it, then that will not be able to cause inflation. If you have a limited supply of anything, and the demand is going up, that will cause deflation. It makes the value of your currency more expensive. But we cannot see something like that happen in the United States because the government needs inflation. We have almost $29 trillion worth of national debt. The only way that we can pay this money back is by inflating it away, because we can't afford $29 trillion worth of national debt. So the only way that we can pay that is if we devalue our dollars, if we make $29 trillion not as expensive. How do you do that? You make each one of those dollars less valuable. That way now we can pay back this $29 trillion with less valuable dollars. Mm-hmm. If we saw this type of deflation, hey, that would be good for people that are savers. That would be good for people that are earning an income, because now guess what? Your paycheck can buy you more. Mm-hmm. Your savings can buy you more. But who is that not good for? It's not good for the government, Because they're not going to be able to pay back their national debt, because now that national debt has become so much more expensive because they have to pay back this $29 trillion with more expensive dollars. So, it's one of those things where that question doesn't solve anything. You have to understand the situation that you're in, and you have to know how to win in the game that you're in. You can't just keep complaining about the problem. You have to educate yourself and do something about it, because the reality is that's the world that we're in.
So hypothetically speaking, if you just got rid of the Federal Reserve, that would fix inflation?
Well, right now, if we just got rid of the Federal Reserve, I don't know if that would fix the issue. But if you got rid of the Fed, if you no longer had the ability to print dollars, that means that now we would have a fixed number of dollars in our economic system. Now, that isn't very easy to do, practicality, because of the way that our economic system and our financial system works, because the banks rely on the Fed to lend money. We have a fractional reserve lending system. I'm not going to get into all that in this video, but the way that our financial system works, it would be nearly impossible to do that. But hypothetically speaking, let's just go with that, in a world where now there's no more dollars that can be printed, we have a limited supply of dollars. Now, all of a sudden, your dollars are going to become more valuable, because if there's a limited supply of dollars, some of these dollars are going to be used up. Someone's going to use these dollars to go out and buy an asset. They're going to use these dollars to go out and buy something. So, the supply of dollars now becomes more rare, which makes each individual dollar more valuable. And that's where, if we had the limited supply, but the same or growing demand, now each dollar becomes more valuable, and you're in a deflationary cycle. That's the whole idea behind something like Bitcoin, where it's deflationary, because you are having a growing demand. More and more people are moving towards cryptocurrency. So you have demand that's going up with a limited supply. Sure, people are still mining more Bitcoin, but there is a limited supply. Once all the Bitcoin is mined, now you have a supply that isn't growing, and demand, which in theory would continue to go up. Because if people continue to move towards cryptocurrency, again, it's not guaranteed, but I think it will happen. But if people keep moving towards cryptocurrency, then that will make each currency, now Bitcoin, more valuable, as long as people use it. If people start to realize, I don't like Bitcoin, I don't need this one, I want a different coin, then demand goes down. So you still need that demand, and the demand will go up if there's use. And that's what we're starting to see happen more and more, is the use of cryptocurrencies like Bitcoin is starting to grow. MasterCard came out and they said that they want to start incorporating Bitcoin with all of their lenders, with all of their merchants, which means that now you might be able to use your Bitcoin wallet to pay for goods. We'll see what actually plays out with it, but that's what they're kind of hinting at. Or credit card companies can pay you not with cash back, but with Bitcoin back. And so it raises the kind of credibility of Bitcoin and cryptocurrency. And as that happens, that will make more companies interested in potentially utilizing it as a means of payment. Now we'll see what actually happens, but that's kind of what the whole idea behind it is. It's deflationary, because as the supply is limited and demand goes up, each individual coin, each individual piece of Bitcoin becomes more valuable because there's less and less of it. And if you need that in order to transact, then it becomes more valuable. See, our currency, our dollars are a little bit different, because our dollars are fiat currency, meaning they're mandated by the government that this is our currency. This is the means of exchange that we have. And so, if you limit the supply, and the demand will stay there, because, we are the strongest economy in the world. We're the strongest military presence. If the demand is still there, because people then will want to own our dollars. Now, all of a sudden, if you're holding onto dollars, you're becoming richer. Right now, owning dollars is a liability. You are losing value by owning dollars because of inflation. If you keep these dollars in your bank, it is a liability. It is losing value. And so these countries around the world that are holding onto dollars, they're holding onto a liability. Their whole idea is, we'll lose less value with this than a potentially different asset. And that's what we're in right now. If we limit that supply, then all of a sudden these dollars will become an asset. It will be beneficial for you to hold on to dollars, because it's an asset that will now become more valuable.
So why don't more people know about this? If the Federal Reserve knows, and eventually they, we talk about last year in 2020, they had to print money to get people out of a bad situation. But if they just focused more on education, wouldn't that kind of solve the problem? If more people knew about it, wouldn't that solve itself?
Who would educate it?
I mean, it could be anybody. Anybody that the federal government...
Who?
The feds themselves?
So you want the Federal Reserve Bank in schools teaching kids how money works?
I mean, not necessarily the executives, but somebody. Somebody's got to
solve the problem. Who's going to teach it? Is it teachers? Because a lot of teachers don't understand money. If they did, then some teachers wouldn't still be teachers. Now, yeah, you have some teachers that are great teachers that love teaching, and if they were millionaires, probably would still be teaching. But if teachers were all wealthy, how many of them would continue their jobs? I don't know. And you need that sort of financial education in order to teach it. And so,
but the Federal Reserve has that.
They have
that education.
They have the financial education.
They understand the system. So my point is, if they teach that to younger generation, then the younger generation knows that.
Then the younger generation is going to say, print away all our problems.
Well, no, they're not going to say print it away. They're going to understand money. So now the federal government might not have to print away problems anymore.
Well, now we're under the assumption that the Federal Reserve Bank understands money and that they have your and my best interest in mind. I don't know about you, but I do not want to learn financial education from the Federal Reserve Bank. I do not want the Federal Reserve Bank teaching people money, because what would they do? They would teach you to keep all of your assets in dollars. Don't invest your money into other things, into non-paper currencies. Keep it all into dollars. But what is the risk with that? The risk is inflation, where now you are the one that's losing out. Now, I don't know exactly what the Fed knows. I'm sure they're very smart people. They're all,
I would hope so.
PhDs, masters. But what do they really understand? Do they really know the consequences? I mean, if they did, maybe they wouldn't be doing the things that they do now. Or maybe they're just ignorant to it. I don't know.
So you're saying the Federal Reserve doesn't really understand money?
I don't know. Maybe they do. Maybe they're ignorant to it. I don't know what they know. But what I do know is that they are hurting the average person. They are hurting the average person by printing.
Well, that's because they got skin in the game.
Well, the Federal Reserve Bank, you made a video about this recently. Mm-hmm. They just recently created a new program or created a new law where the Fed officials are not allowed to trade or invest stocks because they have the power to manipulate the market.
That's right.
And it's crazy that it took until 2021 for something like that to be a real thing. But I would not recommend to have them teach, just like how I wouldn't recommend having banks teach money, just like how I wouldn't recommend having Wall Street teach money. I mean, each person has a different incentive. Everybody has an incentive. This doesn't make all of them evil, right? A bank's job is to lend you money. It doesn't make them evil. It's just what they do. A salesperson's job is to sell you something. So an insurance salesperson's job is to sell you insurance. People say, oh, they're evil because of that. The reason why people say that these salespeople are evil, especially insurance salespeople, is because they don't know what they need. And so they might feel like they buy insurance that they don't need, so they overpay. But in reality, that's just their job. Their job is to sell you something. Wall Street's job is to now take your money and manage it for you, because that's how they get fees. Why do people not like that? Because they don't understand what is a good investment, what's a bad investment, so they can get duped. But you have to understand that all these people have their own agenda, right? And that's where you have to have your own financial education. That way now all this information can come in. You have banks selling you products, you have Wall Street selling you products, you have insurance companies selling you products, you have the government telling you one thing, you have the Fed telling you one thing, you have everybody telling you something, but your financial education works like a filter. It can filter out the crap. It knows what's good, it knows what's not good. And that's where you need to have that screen for yourself, and that screen is financial education. Now your question is, where do you find that teacher? Mm-hmm. It's not going to happen in schools, but where it will happen is through things like YouTube. Because YouTube decentralizes education. Schools don't want to teach this because a lot of times they don't know. I mean, yeah, you have, really good-hearted teachers who want to provide their students with the best education possible. We created a free K-12 curriculum. It's been downloaded like 40 or 50,000 times by teachers, parents, principals, superintendents who want to help spread this financial education. It's completely free. If you want to link to that, I'll also put it in the description. But it's a free curriculum, so people who want to teach can teach it. Now, it's hard for some teachers because a lot of times they don't know. So where do you learn now? Well, you can learn from YouTube. But you have to be careful with who your teachers are. because there are some people that are going to teach you something that may or may not be good. Now, I'm not sitting here saying you have to listen to me. You don't have to listen to us. You got to make that decision for yourself, because you might not like what I say, and that's fine. It's a free country. You don't have to agree with me. You don't have to do what I say. I'm not telling you to do what I say, because I'm not sitting here as a financial advisor, but you don't have to do any of that. But what you do need to do is be educated. And the way that you do that, the sign of intellect, is you learn from both sides. Learn from people on different sides of the equation. Yeah, you should learn why the Federal Reserve Bank does what they do. Learn from their policies. Learn from people who don't like the Federal Reserve Bank. Learn from people who like gold. Learn from people who don't like gold. Learn from people who like stocks. Learn from people who like real estate. Learn from all different types of people, and then somewhere in the middle between all of that is you're going to find what's useful for you. YouTube is a free place for you to start. Then you can go and read books. You can take classes online. I mean, there's so many places where you can learn, but it's not in the traditional classroom sense. You have to be willing to learn. And then you're going to say, oh, but what about the people that don't know about it, that don't get exposed to it? You cannot you can lead a horse to water, but you can't force it to drink, right? I mean, the resources are there for somebody who wants to learn. If you don't want to learn, you can stay ignorant if you want. You're going to pay the price. Yeah, we should have some sort of financial education in school where everybody learns, hey, you need to know how to manage your money. Hey, you need to know what building wealth means. Hey, you need to know what $1 is. Is that going to happen? I don't know. We should teach it in school. But this is where, for the people that want to learn, those resources are there. YouTube has made it more accessible than ever because you can watch it for free at your fingertips. Before, if you wanted to read a book, it was still there. But reading a book is way more difficult than watching a video on YouTube, because now you got to go to Barnes & Noble or go to Amazon, buy a book, spend $10 to $25 buying a book, and then you have to actually read it. So you have a higher barrier to entry to learn with a book than you do with YouTube, but the option is still there. And so you have to, the people that want to learn will learn. Hopefully people watch our videos and are educated. If you don't like our videos, and you're free to leave. It's a free country. I mean, it just is what it is, right? You don't have to like me. You don't have to like everyone you watch. It's decentralizing the education where you can watch who you like.
Right.
If you want to watch a guy with a beard and a turban who talks about guac, hey, well, we're the channel for you. But if you don't, then you can watch whoever you want, and you can do whatever it is that you want to do. It's a free country. But you have to, if you want to build wealth, you have to get financially educated.
Yeah, I mean, I learned the same thing. I was not really taught much in school. Nobody really told me where to find it until I took that initiative and went online, YouTube, and learned for myself.
And with that, it is time for something new. I'm going to call this guac round for now because I don't know what else to call it, but I am going to answer your questions. Now, a little bit of a disclaimer, because I am not a financial advisor. I'm just a random guy on YouTube, and everything I say is just my opinion, but I want to answer your questions with my opinion. If you want to leave me your own question, leave me a voicemail. I'm going to put a link for it in the description. When you leave me a voicemail, tell me who you are, tell me where you're calling in from, and then leave me your question. I'll link that for you in the description. Our first question is from John.
Hey, just break.
Hey, John, how you doing?
Is it smart to take money out of my home, which is paid off, to put in the S&P 500? Thanks, boss.
So, John, you have a home that is fully paid off. First off, congratulations on that, because now you don't have a home payment, which is one of the biggest expenses for so many Americans. You have a home that you can live in where you don't have to pay any money on. Now, your question is, do you take this asset that is now completely paid off, take out some debt, so you refinance on your home, and then you take this debt and put it into the S&P 500. So the first thing I got to say is, I'm glad you said put it in the S&P 500, not go out and buy a boat with it or go out and buy some liabilities with it, because that's what most people do is they build equity in their homes, then they refinance out and they go and spend their money on a whole bunch of liabilities. And that just, oh my God, when I see that happen, it just destroys me on the inside. But let me answer that question specifically about the S&P 500. When you refinance your home, you are taking equity out of your own home, the home that you live in. So it's not just like regular debt. This is a home that you live in, which means if you default, not only do you default on your debt, but you lose your home. And you want to put this money into the S&P 500. Now, the S&P 500, for those of you who don't know, is the stock market, the biggest 500 companies in the stock market. And at the time of us recording, we are near all-time highs. So in historical times, the S&P 500 has gone up by somewhere between 7 to 10% a year. We have seen the economy grow by 7 to 10% a year, but that does not mean that our economy or stock market grows by 7 to 10% a year every single year. This is a historical average. And so if you're coming in at the top of the market and putting money in there, nothing wrong with that, but it becomes a whole lot more risky when you're now pulling cash out of your home and then putting this money in the market at the top of the market. I would not refinance my home at the top of the market to take this cash, even though I can borrow at 3%, and put it in the market, because we don't know what's going to happen next year. We don't know what's going to happen the year after that. Yeah, ideally, we would grow by 7%, 10% a year, and then you could just take those profits and use that to pay off your mortgage, and you get to keep the difference. But there's a big risk with that, because that debt that you're taking out is tied to your home, which means that if things go wrong, if you lose your paycheck, and if something goes wrong and the market is down, now not only do you default on the debt, but you lose your home. So it's much less risky for you to go out and take margin and then use that debt, because you can just bankrupt your way out of that and you don't lose your home the same way you do if you use your mortgage to pay for it. Next up, we got Christoph. What's going on, Christoph?
Hey, Jasper. My name is Christoph, long-time watcher.
Thank you.
The question I wanted to ask you was about hyperinflation. Most recently, Jack Dorsey came out and warned about hyperinflation, and a little while back, Michael Burry also came out and warned about it as well. So I want to see where you fell into in that camp. It seems to be three camps. One saying it's far-fetched, no way it's happening. Two is it's possible, it's very likely, but we're so far away from that. And the third seems to be the Jack Dorsey, Michael Burry camp, where it's happening. So I want to see where you stood on it, and look forward to hearing your response.
So hyperinflation is a very tricky thing. I mean, hyperinflation is essentially when the value of a dollar becomes worthless, and then you see utter chaos. You see just a collapse of the dollar. You see a collapse of the economy. Now, hyperinflation, for people who say that hyperinflation is not possible, I mean, they're completely wrong. I mean, there's always a chance. There's more than a 0% possibility that hyperinflation can happen. So it is possible. Now, do I think that it is imminent? No, I don't think so. We are the world's reserve currency. We are the strongest economy in the world. We have the strongest military presence. And this is what is backing the value of our dollar. So, yeah, we're going to see high inflation. And we're seeing high inflation. But I don't think we have hit that point for hyperinflation. Does that mean that we never will? No. I mean, it is always a risk. There is a chance for hyperinflation. Anytime you print more money, it makes that possibility of hyperinflation higher. But I don't think that we are there yet. As long as we are the world's superpower, as long as the dollar is the world's reserve currency. And Nate, I know you just made a video on hyperinflation too. You covered
exactly on this. Talked about Jack Dorsey and everything.
Yep. Up next, we got Al.
Jaspreet.
Al, what's going on?
I already own a business, and I'm really busy all the time. 6 days a week I work.
Wow.
I would like to invest in real estate, but I don't have the time to do it. If I were to invest in one property, how much time would this really take out of my day?
Al, good question. So first off, congratulations on building a business. It sounds like it's successful since you are so busy. Now, there's two things I want to ask. I know you asked one question, but there's actually two questions kind of hidden in there. The first question is, you're building a business. It sounds like it's doing well because you are working your butt off. Building a business is not easy. Now, the question is, what do you do with this excess cash? Your business is building money, and you have this cash sitting there. Now you want to go invest in real estate. That way you can start generating some passive income. You might want to consider taking some of this extra cash to reinvest it back into your business so you can buy some of your time back. But I'm going to focus in on your question, the second question, which is what you asked. If I go out and invest in real estate, how much time is that going to take? If I go out and invest in real estate right now, it will take me time to find the property, and it will take me time to renovate the property because I like working with distressed deals. And so that's where my time goes. After I find the deal, I hand the keys off to my property manager, and I don't do anything after that. The only thing that I do is I look at my monthly reports and I look at my quarterly reports. You could do that on your own free time. And I mean, honestly, less than an hour a month once you get to that. But the tough part for me now is finding the deals and then doing the renovation. That takes a lot of work because I like to find the good deals. And right now in this market, property values are very high and I don't want to overpay. So I'm spending a lot of time doing that. Now you can find good team members, you can find a real estate agent, you can find brokers and do all that. But again, this takes time to do that. When I first started in real estate, I didn't know what I was doing, and it took me a lot of time because I was making a ton of mistakes. And even though I hired a property management company, they weren't doing a good job, so I was trying to manage them. So if you want to invest in real estate, you have to understand it is going to take time. I mean, in terms of hours, you got to be willing to devote at least an hour a day if you're just getting started and you want to do it right. If you're not able to do that, then maybe you need to reinvest back into your business so you can buy some of your time back. And we have one more question. This one's coming in all the way from India.
Hi Jaspreet, this is Shashikant from Delhi. I watch your videos very often.
Thank you.
And I'm thankful to all the insightful videos you put on YouTube.
I appreciate
What I
that.
want to know is when do you think gold is going to go up? Because we missed large part of the rally. We understood that there's so much of printing. We don't know what might happen. But to our surprise, equity has gone up. And now we are, if anybody's invested in gold and precious metals, when do you think that's going to start?
Good question.
Thanks. Take care.
Thank you. So I don't look at gold as an investment. I look at gold as real money, which means I don't care if it goes up or down. I buy gold as a store of value. And if it goes up, great. If it goes down, I buy more. That's the way that I look at gold. When is it going to go up? I don't try to time the market. We have a lot of money printing. As people start to see more of the effects of inflation and people start to worry more about inflation, that's when they would leave things like paper dollars and maybe stocks and move their money into protectionary assets like gold. So if people are worried about inflation and they're worried about long-term inflation, then that's when they would really start to move more towards gold. But again, I don't try to time that. I own gold like money. Not a bad guac round for the first time. If you want to ask a question, remember, I'll put the link in the description. Nate, that was another great guac talk.
Yeah.
If you want to see more of Nate, check him out at Minority Mindset News, publishing videos every single day about the business and financial news. He puts up some great content, so make sure you check that out. We got Guaki here today. I am Jaspreet Singh, and I'll see you next time. Thank you for watching. If you enjoyed this video, here's a video about investing in cryptocurrency that I think you'll love. And while you're at it, download a free guide on how to start generating passive income. And as always, keep hustling.
So they want you to keep in the system, devalue your savings, devalue your working salaries to try and keep this system alive,